Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, December 1st, 2016, and Friday, December 2nd, 2016. Welcome to December 2016, amazingly. Let's look at the ES front month futures contract. This is the daily chart of the S&P in broad market form. Came back a little bit today. We'll look at that real carefully here, though, shortly. This is a bigger turning point day than I think some people might think on the surface. And we'll go through some of these things in order to really understand why. So, but as you can see, we're flirting with that 10-day moving average here on the broad market. It would be the first time in about a month that we broke underneath it if we do. So we'll keep an eye on that. Let's go through the major indices. We've got crude oil down 19 cents in the aftermarket, but it was up quite a bit today, up about 3 points to 49.25 or so. It's a big move up. That's when OPEC said they were going to cut supply. We've got gold down 17.10 to new lows since back in February, almost a year. S&P cash index loses only 5.85, not a big deal, it wouldn't seem like. Let me show you where the real problem is here today. Here's a look at the Dow Jones Industrial Average, which was higher by quite a bit, like 80 points early, closed up 1 point, which is nothing for the Dow. Makes it look like everything's okay in the market, right? Well, let's take a bigger look at what held that up. It was Goldman Sachs, which was upgraded by Deutsche Bank today. Very strange upgrade after the stock's already made a move from, let's just call it 160 at the beginning of October. So 2 months moved from 160 to 212, and then they upgraded. It jumps another 7 or 8 points. It is one of the Dow 30 stocks. So this big move in that Dow 30 stock moves the Dow up, held it up most of the day, and gave us some headline cover in the news to talk about the fact that the markets were up again. But in fact, it's not really what was going on. So let's take a look around better. TLT, which is the bonds, after 2 little days of a bounce finally, the first since the election, jumped back down and gap down between the ADP number, employment number, which was strong. Still a lot of jobs being created by this economy in October and into November. And then, of course, the OPEC situation as well caused an impact on the bonds. So we gapped down. We're still above the risk line. That's the pink line of the 13 buy signal. But as you can see, we might be trying to form a general bottom, but it's not going to happen easily. God help us, by the way, if we break that pink line, because if we do it soon, you know how these things go. You get a 13 buy signal, you get a risk line, you break it early, you usually get a big run to the downside. These bonds just can't go lower without causing some major impact, in my opinion, on what's going on in the marketplace. All right, now let's go through the other indices and show you what the real story was. So the NASDAQ 100 down 62 points today, breaking back under the 10-day moving average, closing lower than it did the night before the election. We've got the SOX index only down 5, right on the 10-day moving average. That doesn't look too troubling yet, but of course, if it breaks that, here's one. Look at the biotechs. This was the one that gapped up and was so strong for the couple of days after the election. We've now lost all that back, and we've closed under the opening of the day after the election here on the biotechs. And obviously, you can make the strong case gaps fill. We've got a gap to fill. It's almost 100 and something points lower on the biotech index. Not to mention, I think there's another gap back there, 2650. This is not good. This is also a head and shoulders formation. Take a look carefully, and you'll see it with the right shoulder being that 13 sell signal, which was right on target, by the way, right back in back at the end of September. The VIX only climbs 43 cents in all this to 1333. The trend closes at 0.62. That's a low reading. However, the number of 11 days back that dropped off the 10-day moving average was also a low number. So it didn't change the 10-day moving average much. It's still at 1.08. We do have some big numbers like that almost 2 number that's going to come off here shortly, though. So be aware of that. This is interesting. NASDAQ volume a little better today, finally. We had a great trading day, by the way. 1.8 billion shares on the NASDAQ. We had a lot of stocks that moved really nicely. We'll show you a couple of them in a moment, but it's the volume comes back and the trading comes back and things start to feel more normal, and we got to move, and we took advantage of it. So advanced decline ratio on the NASDAQ, this is the story, right? The headline is, oh, the market's up and Goldman's up and blah, blah, blah. Meanwhile, negative 866. That's 866 more stocks down than up on the NASDAQ, and on the New York, negative 621. So more stocks down on the New York than up as well. Google loses $13.56, hanging off a ledge right there. Apple down almost a point. Hasn't really done much here in a while. Amazon back down 11. Also looks like it's rolling over. Remember, these are now lower highs on a lot of these stocks. So if you go and break the recent lows, that is not a positive. That's the first real rollover in over a year on those stocks if it happens. Netflix down 51 cents. Tesla down just 17 after getting clobbered, 17 cents after getting clobbered worse the other day. But if you go look at the major stocks in the market, and if you excuse my jumping around here for a second, and bring this over to where it belongs. If you just look in the middle here at the list, these are the list of generals, the stocks that we follow the most. Look at them all red. Adobe down 2, Amgen down 2, AVGO down 4.96, BABA down a point, Baidu down. Look, everything here, and then there's Goldman Sachs up $7 because of an upgrade. Priceline down 16, Sina down $1.98. I mean, just a lot of stocks down. Big, heavy down day across the board, except for in the one that they wanted to talk about on the news. All right, let's switch back to what we're looking at. First, we'll go look at the intraday action here on the ES. This is the front month futures contract. Gapped up, obviously helped by Goldman. Pulls back after about an hour, almost fills the gap, fills it over lunch, and then late in the day it tries to bounce once, can't hold it, sells off and closes near the lows. We look at the NASDAQ futures. Look at this, much more negative. Topped out basically on Tuesday over lunch, rolled over, very flat opening, tiny gap up essentially, wiggled a little bit for about 15 minutes this morning, and then just basically tanked all day. Traded more than average daily range. We had a lot of nice winners. Apple short, this AVGO that you see right here was a real nice winner for us on the session. You can get up to 3 points on that. It never really looked back. Our short entry was 173.31, which was basically a break under that inverted cup formation from yesterday. If you put this on a 15-minute chart, you'll see this. It's really a cup and handle is even better. There was a gap to fill, so we took that short. But look at the way it played out. I mean, it never really put you in any danger. Could have rode this thing all the way down to the close if you wanted. And nice winner overall on the AVGO. All right, so what do we expect for the rest of the week? We typically do not do market previews like this for Friday because most of the week's played out. Obviously, if something big happens tomorrow, like we accelerate to the downside or something like that, then I'll come in and do a market preview again. We still have a lot of economic data coming out. Let's talk about that on tomorrow, Thursday. Challenger job cuts at 7:30 a.m. Initial and continuing claims at 8:30 a.m. Construction spending and ISM index 30 minutes in. Natty gas an hour in. Auto and truck sales at 2 p.m. Eastern time. On Friday, non-farm payrolls with unemployment rate, obviously a big deal. Remember, this is the November number. Be interesting to see what we get here out of non-farm payrolls and the unemployment rate. I don't expect them to change much. We're expected at 4.9%. I wonder if Trump will consider that it is 4.9% as the headline number now that it's going to be his number. Anyways, charts as usual brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Obviously, it looks like things are improving, and I look forward to the next few weeks ahead of Christmas so we can get some good trading done. Have a good one.